दोस्तों नमस्कार। तिलहन, दलहन, मसाला, कपास, गवार सीड, सोना चांदी, मेटल, इन सभी के भाव निशुल्क एक वेबसाइट पर उपलब्ध हैं। खाद्य तेलों में सोयाबीन, सरसों, पाम ऑयल के भाव एवं रिसर्च रिपोर्ट्स एक ही प्लेटफॉर्म पर उपलब्ध है, तुषार ग्लोबल सर्विसेज.com। बिल्कुल देखना ना मिस कीजिए। यदि आप व्यापारी हैं, मंडी के कमीशन एजेंट हैं या फिर हैं किसान, इन सभी के लिए निशुल्क विशेष भाव एवं रिसर्च रिपोर्ट के लिए विजिट करिए तुषार ग्लोबल सर्विसेज.com।
Good morning, everybody. I Tushar Jain, CFO and Research Head of Astro Guru and Tushar Global Services.com. Welcome all of you today on 10th October 2022. In this episode, we will discuss about, as you all know, about the Indian stock markets and what all things you need to consider for next few trading days. So, if you remember in our previous live sessions, which we have mentioned on Friday, we have strongly recommended that it is that some more profit booking and volatility can be seen in especially Indian markets, and exactly things are showing in Indian markets. Nifty, Bank Nifty, both are significantly down and by more than 1%. And we also recommended that it is better not to go for long position, not to go for buy position for the short term perspective. Rather, for short term, it is advised to buy Bank Nifty put for hedging purpose. And viewers who have executed and bought Bank Nifty put must have reduce their losses in cash market by earning in the options. So during these times, it is better to go for hedging, and hedging tools are available in Indian markets, in Indian stock exchanges, that is NSE, that we have futures, options, and other uh, tools for the hedging. So for this purpose, we can use those. So I hope you liked our analysis, and on Friday also we have strongly recommended that some more profit booking can be seen, and some profit booking can be seen in Indian markets, especially Indian markets, and things are showing exactly today. So now what is expected for the next coming trading days, we will discuss in this episode. Before that, we'll take a short break. We'll be right back. So keep up with us. So welcome back. If we see the international markets, then we can see that on Friday's session, the US markets fell by more than 2%. In fact, Nasdaq fell by around 3.80%, around 4%. And also, if we see the Asian markets today are also showing weakness, whether it is of Chinese market, whether it is of China, Japan, Hong Kong, Taiwan, all are showing in deep red sign. And Indian markets are also showing exactly the same. And if we see the Dow American futures also, they are also somewhat showing some more weakness. And if we see the Indian markets are showing significant downward movement. And as you can see on the screen also, Nifty and Bank Nifty both are showing downward movement. Nifty is at the level of 17,088 and Bank Nifty is at the level of 38,713. Both are down by more than 1%. And if you remember, on Friday session, we have discussed about the US employment data, and I have shared my uh, view that if the jobs data will be good, then it will be bad for the stock markets, because the good jobs data indicates good earning, and during it lead to more inflation, as the people will earn more, so their capacity to spend will increase, and this will increase the inflation. And since the whole world is already struggling for the inflation, and especially US, yeah, that is the United States of America, and because of which it is continuously rising its interest rates. So good job data will lead to more inflation, and more aggressive interest rate hike be expected in the next coming months. So that is why the stock markets fell after the US jobs data. And now what it is expected. Now if we see the Nifty, Bank Nifty, both are showing downward movement, and if we see it there exponential moving averages also, then we can see that uh, Bank Nifty is at its uh, 50 days exponential moving average, which is at the level of 38,719, and it is slightly up on from those level only. And today it made low at 38,518. And similarly, in Nifty also it is showing similar, but Nifty on the contrary is at its 100 days exponential moving average, so it is showing more weakness as compared to the Bank Nifty. So for the next few trading days, some more volatility can be seen in Indian markets. Our hold still will be volatile. Weakness can continue in Indian stock markets, and it is better to hedge your positions by buying Bank Nifty put, so that your losses in cash market stocks will be neutralized by the profit in Bank Nifty put if the markets fell more from the current levels. And if the markets recover, then you can sell the Bank Nifty put, and marginal loss will be there, which will act as a insurance premium for your cash market stocks. But you can consider buying stocks for the medium to long term perspective, that you can consider. And for the medium to long term, you can consider buying Tata Motors. Sorry, Tata Motors is significantly down by around 3.5%, and it is at very attractive levels, so you can consider buying this stock for medium to long term perspective. Also you can consider HDFC Bank, or again for the medium to long term perspective. But for the short term, you can consider Asian Paints. When consider Asian Paints, Asian Paints is looking good for the short term perspective. But you can keep stop loss at 3244 levels, and consider Asian Paints for the short and medium term. Also some more weakness can be seen in oil marketing companies, that is ONGC, Oil India. These stocks can show further weakness, in although they are showing some positive move, but they are looking weak for the short term perspective for this week. So this was the this our analysis for the next few trading days and medium to long perspective for the Indian stock market. So below this is, and we should go with a disclaimer also, that all these information and research is purely for research training purposes, and we will not be responsible for any kind of profits or loss incurred by you if you go to any trade, and if you go for any trade, you should consult your personal financial advisor as well as your personal wisdom. So I hope you liked our analysis. See you in the next episode. Thank you and